We're talking about retrenchments today. Now, retrenchments is a very topical theme and a topic, and quite a difficult one also to talk about. But it's important that if you are affected, that you listen to today's topic. Firstly, there's two types of retrenchments that will affect you. Firstly, voluntary severance packages, meaning that your employer might come to you and might request that people voluntarily come forward and take retrenchment, or secondly, forced retrenchment, meaning that the decision has been made and there's certain redundancies that the company will be addressing. Now, first thing is important. You have to stay calm and you have to ensure that you don't take it personally. These things happen mostly due to operational requirements, and getting very upset about it is not really going to help you in the process. Secondly, you have to know your rights. You have the right to respond, so you need time to think about it. You can't be forced into making a decision in the moment in one meeting's time. So you need time to respond. Your employer must also provide you with a UIF certificate, as well as a Section 189 letter, as well as a certificate of service and a settlement agreement. These things are important. You need it in written form, and you need to store it also safely then. So at retrenchment, you can expect three types of payments. Firstly is your severance package, which includes the voluntary severance package, or ex gratia pay, as some people refer to. And what is this? This is typically by law the minimum amount that you can expect is 1 week's pay for every full year's completed service. Now, normally with the voluntary severance package, your employer will load a couple of weeks additional pay to it to give you a bit of incentive to come forward and to take this opportunity. How is it treated in terms of tax? It's important to look at the tax aspects. Firstly, your severance package is treated as a retirement lump sum that you receive. So you won't be taxed on the first 500,000 Rand. It will be at 0%. Thereafter, if it's above the amount that you're going to receive above 500,000, then it's going to be taxed between 18 and 36% based on the value. It's important to note that if you've taken previous voluntary service retrenchment packages or a retrenchment package, then your 500,000 exclusion will be limited or will be less by the amount that you've already taken. It's also important to note that if you have tax debt, or if pay-as-you-earn, if you owe pay-as-you-earn basically, then you might also see that that's deducted before you receive the amount. Your employer will get a tax directive from SARS before the amount is paid to you. So any amounts owed to SARS will be immediately deducted. It's also important to note that you won't qualify for this benefit if you own more than 5% of shares in the company that is retrenching you. What do we actually encourage people to do with the severance package that they receive? Firstly is to pay off all your debt. Secondly is then to look at your long-term financial planning and to see where there's significant gaps. Now, this will be done with your financial planner, and you can go through it with your planner to decide where this should be allocated. We really encourage people not to just go out and spend these monies. This could really help you with your long-term financial planning. Second payment that you can expect is your retirement funds. If you've had a pension or a provident fund, then you can expect retirement funds that will pay out. You've got two options with this. You can take it in cash, then you'll also pay tax on that. The withdrawal tax tables will be used for that. Only the first 25,000 Rand will be at zero tax. The rest will be taxed quite harshly. So it's not generally a very good option for people to consider. Second option is to preserve what you've already saved up. And that's the option we encourage people to consider. So you can put it into a preservation fund, and then you can continue your long-term financial planning and saving towards your goals. The second payment that you can expect is your retirement funds. If you've been a member of a provident or a pension fund, then this amount will become available. You have two options that you can look into. The first is to take it all in cash. You will be taxed on this. Only the first 25,000 Rand will be at 0% tax, and the difference will be taxed quite harshly. And it's also important to note that at eventual retirement, you'll be taxed again on this amount that you've taken earlier as a penalty. So typically it's not a good option we advise people to look into because of all the taxes. But if you are immigrating or if you're planning to leave the country, then it might be an option. Secondly, you can preserve your pension monies or your retirement funds. And this is a very much a better option for you. This option means that you preserve it for retirement. There's no taxes or no penalties, no fees applicable to it. And you still have the option of one withdrawal before you retire from these monies. So if you really incur an emergency and you don't have any funds, then you can still make one withdrawal from your preservation fund. The third payment that you can expect is leave pay, accumulated pro rata bonuses or notice pay. Those amounts will be taxed normally on income tax. It will form part of your final pay slip and you'll receive it as part of your final payment. Important is UIF. We spoke about it earlier. You must definitely speak to your employer about the necessary UIF documents because it will enable you to claim from the UIF for a period of 12 months where you can essentially receive a good amount of monies per month from the UIF once you've been retrenched, and it will offer you time to seek another job or maybe to start a business in that time. So really this is important, but you need the specific documents. The section 189 letter is the most important probably. Your long-term insurance is also affected. If your company provided group risk to you, then you must inquire from your company or your employer if you have continuation benefits. This means that you can continue your cover as an individual without any underwriting requirements. In easier language, it basically means that you can, if this option is available, you can still acquire the same amount of life insurance without any tests needed, blood tests or medicals to be done, so that you can still have that with the same service provider then. And generally, it's a good benefit. You might struggle with some health issues, which means that you might be penalized on it in terms of loadings, and your premium might be much more if you have to go through underwriting. So consider this option, speak to your employer as well as the service provider, and have a look at it. Your medical aid is the same. In most cases, people have the option within 1 month after their retrenchment to acquire membership directly as an individual, and also no waiting periods and those kind of things should apply because you've been a member actually for some time. It's important also to note that in this journey you're going to have to decide where you're going next. So you have to first start off with by updating your LinkedIn account. If you don't have one, then you need to create one. It will just give you a higher likelihood of engaging with the job market online. And obviously update your CV on LinkedIn. Then you obviously have to consider, do I need to start a new business? What am I going to do next? And with that, some business coaching will be definitely ideal for you in that situation. So these are the things that are important from a retrenchment perspective. They are quite technical, but it's important to note that 3 types of payments is going to come your way, and you need to know how to handle these payments. And cash always, to take cash out of it always is not necessarily the best option. Look at your options as I've discussed it, and also find the best way with your financial planner to navigate through the retrenchment process. All of the best.